Hello traders. Today is the 13th of December 2025. Hope you're all keeping well and having a fantastic Saturday afternoon. Well, in the UK it's 15:41 p.m. Yeah, so I am well, and hope you are well as well. So this is our manipulation video 104. If you haven't seen 101, 102, 103, please take a look at them. And yeah, I believe this will help you to change the way you trade and help you become profitable. All right. So this is our 104 video, and we are looking at the British pound against the US dollar on the daily time frame. Okay. So we were trading to the downside before we met a stumbling block. Yeah, where we call the area we call support and resistance zones. Yeah, so we first had a bounce to the upside right there, the minute one, um, before we broke the level, and then we had the rejection here. Actually, I do this. So we had the rejection there, rejection there, rejection there, rejection and rejection and rejection of the level. Yeah. So with these 6 touches, yeah, traders will be eyeballing this area, this zone, to take a trade. All right. So this is a well defined zone. Yeah. This level right there is well defined area. Yeah, or well defined zone where traders will jump in to take longs and shorts. Okay. So at the sixth touch, we had this big drop to the downside, this big, massive drop to the downside. So when we retraced back to the level, you won't be surprised to see traders coming in to take a sell trade. Why? Because, if this area worked, moved price down, you will also believe that when it came back again, that it will repeat the same thing, and it did. Yeah, it did repeat the same thing. It moved all the way down, lower than the previous move to the downside right there. Okay, so this level is very good. It's very good for the market players, the whoever moves the market to manipulate using this level. Okay, so after we moved down here, we came back again to the level. Yeah, so if you did not participate here, yeah, if you did not participate in any of these moves to the downside, yeah, then when they came back at that level right there, you will be tempted, you will show interest to go to take the trade. Yeah, you will show interest to go short. Okay, so if I zoom that for you, you will see beautiful candlesticks. Yeah, engulfing candle, engulfing candle, engulfing candles. Yeah, so you had big, massive red candles telling you, please go short, go short, go short, because it worked here, it worked, it worked, it worked here, and we had this big move to the downside. It also worked there. We had a move to the downside. So why wouldn't it work here? So you will go short. If you go short there, your stops will all be above this high, right? And then we moved up. Can you see the wick there? That is a stop hunt. Yeah, stop hunt. And then it came back. We retraced again. Yeah, when we retraced, there will be more stops at the level because this stop hunt here was a minor one. So when we retraced, more traders are short because we have people that only trade retracements. Yeah, so more traders come in, um, and went short. You can see again big red candles, so they've jumped in short, um, and then the market went back up again. So like I said, when they come to take us out, they come aggressively. They move aggressively. Can you see how this week here is higher than this week? Yeah. So if you weren't taken out here, then obviously there you have been taken out. Yeah. And again, if they didn't catch you there, you're caught here. So we now closed above the level with engulfing candles. As usual, breaker traders have jumped in to go long. Our stops will be below this level. We've had retracement to the level. Again, we're showing big engulfing candles. More buyers are coming in. More stops are below the level. So they need to come back to take those stops of the long traders. All right. So we're pushing up. These long traders are so happy they are making money. Um, and then they went all the way to this high. We retraced back, not quite to the level. So I believe that those long traders are still holding on to their trades. And then we moved back to the upside, and then retraced back again. I believe more traders have jumped in again to go long. So stops are still residing at this low. Yeah. Um, Move to the right hand side. So we came back, retested the level again. More longs. Can you see the big candles? So more longs are in, more stops below the level. They've not quite come back to take them out, and they have to do it. Yeah, this is how the market works. They have to do it. They have to. So they've come back, not broken the level yet, and more longs in, more stops below the level. So if you have gone long here and taken long at the retracement, maybe 37 points, or not, 38.3 fib retracement, or is it 38.4, whatever it is. More, so this is where they will go long. And then yeah, retracement to the level, more longs in, more stops below, and then this is where they came back to take all the stops of the long traders. Yeah, so this is where they came to take the stops. All right. um yeah, and this is it. All right. So this is why it is so difficult to make money in this financial market, in this business. Is hard. So you basically need to learn how to read your chart. Yeah, you need to learn how to read your chart if you want to be successful trading the forex market. So the breakouts, you leave them alone. You don't take them, because they do not last for a very long time. Okay, so this is our video manipulation 104. I hope this helps. Any questions, let me know. Take care now and have a good weekend. Bye.